Welcome back. I'm Pratap here. Today is the 25th of February 2024. In this video, let us generate a Nifty and Bank Nifty supply demand zone chain. I will also draw the zones for Nifty exactly the same way you can practice drawing the zones for Bank Nifty with the help of our reports. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. So you can visit our homepage and click on the playlist supply demand zone price action course. You will get into this page. Or I am also providing the link to this playlist in this YouTube video description. Click on the link, you will get into this page. Then scroll down to the bottom of the page. Here, starting from lesson 1.1, you can access all the training lessons. All these lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills. I have also provided the link to our Telegram channel in this YouTube video description. So please join in our Telegram channel. It will be helpful to you. Each time when we release a new video, we will update at our Telegram channel. Now let's get back to the report generation. First, let me generate the supply demand zone chain for Nifty 50 and for all the time frames starting from quarterly time frame. So in the NSE stock code, I am entering Nifty 50. And I am selecting the time frame as quarterly because from quarterly until 5 minutes we will go through one by one. And let me click on the buttons SDZ chain, that is supply demand zone chain. Now all the demand and supply zones for quarterly time frame will be displayed here. All these are all currently active zones. Some peer zones also it will display because currently we enabled peer zones. But these zones are not good for trading point of view. But if you look into the first demand zone, this is the most recently created demand zone in quarterly time frame. And moreover, this zone is close to the current price. So that is the reason why let us draw this zone. How to draw? Check the leg in. What is the leg in? This is the date. And the leg out date, the candle's date. So based on this you can draw. And also it is showing how many base candles are there. Now I am taking the reference of leg in. The 3rd April 2023 is the leg in. One base candle is there. After that leg out is there. So I am going to the Nifty 50 chart. And here I am selecting the time frame as 3 months. So that is quarterly. Now this is the quarterly chart. So when is the leg in? 3/4/2023. Look into this candle. This is 3/4/2023. We have a base candle and we have a leg out candle. Rally, base, rally. This is a quarterly zone. Let me mark with light color. The most light color is monthly supply zone. Let me draw. Let us use the same for quarterly also. Sorry, demand zone. So this is the quarterly demand zone. What you are observing from this quarterly zone? According to the quarterly zone, overextension, it is having overextension. Suppose if there is any crash, probably the prices will be coming down up to this EMA 20 line. But we can't expect that much. If something wrong happens, somewhere here it gets the support. That is what the meaning. But this is the nearly recently available quarterly zone. Now what we do, we have drawn this is the top-down analysis. According to the top-down analysis, we will start from actually monthly, weekly, daily, that way we do the analysis. Now I started with quarterly because sometimes quarterly zones and monthly zones might be nearly equal, or there might be zone confluence might be there. So that way it will be helpful to us. Next, let me go to the monthly time frame. I am going back. Now instead of quarterly, I am changing the time frame to monthly. I am generating the supply demand zone chain. So the recent zone is a pierced demand zone. This is a old zone in the year 2021. Between 1500 and 962 and 1500, 450, the zone is there. Why there is no nearest zone? Let us look into monthly time frame. So though the zone structures are not clear up to this particular point. This is the monthly zone. This is the one pierced. After that, base candles are there, but there is no proper leg out. That is the reason why it's not displaying. Here leg out is there, but there is one more leg candle. Between these two leg candles, there is no base candle in monthly time frame. So that is the reason why we can't draw a proper monthly, but time being we can assume quarterly is the replacement to the monthly. Just for time being we can assume like that. See, a rally base candle is there. Probably this could be another base candle. In the next month, if there is a big rally in Nifty for 50, probably a new monthly zone will be created here. Rally, two base candles and a rally. Because now the month is almost going to complete and there is only next 3 more working days to complete this month. I don't think you see a major push in the market. If next 3 days is going to be a huge bullish in the market, let us assume, probably by end of this month a rally candle will be formed. But we can't expect a huge rally for the next 3 days. But time being, a base is getting formed here. But is it going to be a rally candle or is it going to be a drop candle? We need to see in the coming days. So nothing much we have seen from the monthly. Now let us move back to the weekly and generate the weekly report. So from monthly, I am going to the weekly, changing the time frame and generating the chain, supply demand zone chain. At present, all these zones are all-time high zones. So even weekly also we don't have a supply zone. Whatever is the nearest one, this is the all-time high zone. So when this weekly zone is formed, in 13/11/2023 to 28/11/2023, in between there is one base candle. This is a weekly candle. Let us look for 13/11/2023 and weekly time frame. That is a leg in. So I am changing the time frame to weekly. So what is the date? 13/11. This is the one. This is the leg in. We have a base and we have a rally. So let me draw. Let me change the color to weekly. Weekly demand zone. Currently, this is the weekly demand zone. There are no weekly demand zones after above this. See here, if you look this, we have a drop candle. This is also a drop candle and rally candle. There are no base candles. If you consider this is a rally candle, 2 base candles and a drop candle, that means a supply zone is created, but this is violated with this drop candle, rally candle. Now 3 base candles are getting created here. Rally, 3 base candles. Let us check next week if there is any big rally or big drop. Maybe a zone will be created here. But time being, there is no supply zone. Here you may ask a question. There is a rally base, can't we consider? This is not a great leg out to consider, and moreover this is a ERC candle. This is a ERC candle. Because software consider this is a ERC candle, this is a ERC candle, this is a ERC candle. So no base. But human point of view, we have one advantage. What is the advantage? Sometimes we can compromise and we can draw the zones. Machine cannot do that. Machine cannot compromise. Whatever the rules you defined, accordingly machine will identify the zones. If your algorithm is accurate, machine always looks for accurate way in identifying. But when it comes to the human point of view, we have some kind of relaxation. What kind of relaxation? Depending on the situation, you can change the rules. Machine cannot change the rules. Okay, if I have taken a decision, what is the decision? Okay, time I will consider this as a Even though this is a ERC candle, maybe I will give a benefit of doubt here. Maybe this could be a medium sized candle instead of ERC. See, if you look into this candle and this candle is bigger than this candle. This ERC candle is bigger than this candle. But this is looking like a base candle because body is less. But look into the range. The range of this candle is bigger than this candle. And the range of this candle is almost equal to the range of this candle. This is obviously a rally candle. You can also consider this as a leg out candle. But there is no base candle before that. That's why we couldn't draw a zone. If that is the case, how can you consider this as a base candle? Generally we can't. But sometimes, as a benefit of doubt, people will draw the zone like this. Just for reference purpose. Please remember, this is only for reference purpose. Actually, this is not a valid zone. But reference purpose. Why reference purpose? Mostly in this area, lower time frames, you may find zones, a good zones. That's why that reference purpose, we as a human, we can draw some invalid, sorry, it's not invalid, it's a valid, we can draw a zone, but it is not a perfect zone. We are drawing this zone by compromising the rules. Why should you compromise? That is the question you can ask. Is there any rule that we cannot compromise? No, there is no such rule. But if you compromise and draw the rules, mostly they may fail easily. But if you are an experienced person, you know when to compromise and you can draw some zones. How you are compromising? What is the meaning of compromising? Giving relaxation to the rules you already learned. What is the rule I already learned? A candle having large range cannot be used as a base candle. But I compromised. I gave a relaxation to that rule. Okay, not a problem. Let me consider. That is the way I thought. And I am drawing the rule. Is there any rule that I cannot compromise and draw the rule? But why I compromised and drawing this zone? Because there are higher chances that in the lower time frame, there could be some zones. For that reference point of view, and moreover, this is weekly EMA. Weekly EMA is confluence in this area. Even though there is no right weekly zone here, but at lower time frame, you can identify some zones. Even though this is not a great leg out. This is a medium size candle. Medium size leg candle. Medium size leg candle cannot be used as a rally candle. That means leg out candle. What I mean rally, this is also a rally candle, but medium size rally. But we are looking for a large size rally candle for our leg out point of view. But what I am doing, I am just compromising and I am drawing for reference purpose, I am drawing this weekly zone. This is one advantage human is having. This kind of advantage machine cannot get. Machine cannot compromise and draw the zones. If that is the case, many times if machine compromises, mostly you get wrong zones. That's why the rules are very strict. If it met the exact rules what we have defined in the algorithm, then only it will identify as a zone, otherwise it won't identify. But anyway, why I have drawn this weekly zone is, it is a compromised zone because not for the trading purpose, but to identify lower time frame zones in this area. Because in this area, there is a weekly confluence is there. If I identify any zone in this area that is equivalent to the weekly zone confluence will be there. If prices next few days, if prices are coming up to this area, our extension will be completed in weekly time frame. Most probably the prices will be starting from here if there are any lower time frame zones. Just for that reference I am drawing this, but according to our supply demand zone chain, this is not identified. According to our supply demand zone chain, the one we have drawn this zone is here. This is the zone within the quarterly zone. This is the quarterly zone, within the quarterly zone. And moreover, if you look into monthly time frame, here monthly EMA confluence is there. So probably after some days, this weekly zone what we have drawn inside this, will get monthly EMA confluence. But this is weekly EMA confluence in this zone. See, first always daily overextension should be completed. After that only weekly overextension will be completed. After that only monthly overextension will be completed. And if prices are falling more and more, prices will go up to monthly overextension, and from there again it will start moving up. Generally monthly overextension will be completed only if market is falling much. If market is falling only up to daily zone, only daily overextension will be completed. After that again prices will be moving up. So anyway, now we have drawn a weekly zone, and as a temporary weekly zone we have drawn by compromising. It is not a valid weekly zone. I just compromised. There are two reasons. One reason is a weekly overextension. Weekly confluence is there, weekly confluence. And the second reason is after prices entered here, started moving from here. You cannot say because of this weekly zone. Maybe inside this area there is a daily zone, or maybe 125-minute zone, or maybe 75-minute zone. That we have to identify. So now I am moving to daily time frame. So changing the time frame to daily, let me draw the chain. From daily onwards, give importance to high liquidity zones. Much importance, because they will act as our support levels or resistance levels. Up to weekly, okay, you need not bother about whether it is a normal zone or high liquidity. But daily onwards, identify high liquidity zones. Mostly they are going to be the levels during that week. Probably price movement will be within those levels. So here we have two zones. This is the first high liquidity zone, the second one, and this demand zone is the first normal zone. And moreover, look into this high liquidity zone, it is already pierced. Generally pierced zones we don't trade. The next high liquidity zone is at number 5. And at 20,000 level, that means more than 1,000 points, if not more than 1,000, I mean more than 2,000 points. If Nifty is down, then only this zone, demand zone will be triggered, the trades in this demand zone. But during this week, this coming week, is Nifty is going to down by 2,000 points? We don't know. It's not easy. I'm not saying it is impossible, but I'm not saying it is not easy that much. 2,000 points down in just 1 week, unless something crash, something bad happens to the market. So first let me draw the first normal zone, nearest zone, because it is a fresh zone. It's not tested, no rejections. So first let us draw the normal. When the most recent daily demand zone, the legging is on 12/2. We have a base candle. So 12th February, I'm changing the time frame to daily. So this is the 12th February. We have a drop candle, and then we have a base candle, and then we have a rally candle. So let me draw the daily zone. Let me change the color to daily demand zone. So here we have a daily demand zone. And we have a pierced zone here. Just for reference purpose, I am drawing this pierced zone when it is 2112 and 2712. This is 21 and this is a 27. We have two base candles. So this is the one. See, this is pierced already. The zone is pierced. Prices didn't close before, it opened before and closed above. Here also this candle pierced. Finally the price is closed inside. Why it is pierced? Maybe below this there could be a 75-minute zone or 125-minute zone which is providing support. Let us identify. That could have been a trap. Maybe it could be the zone below could have been a bear trap. But here, within this area, one more zone is created. After pierced, a new demand zone is created. Rally, base, rally here. See, this is LOTL concept. The pierced zone and this, but actually this is not LOTL. The reason is, by the time this zone is created, this one is already pierced. Pierced zones are invalid zones. So you cannot say it is LOTL. If both the zones are active zones, active means what? They are not pierced or they are not violated. They might have been tested. Test is okay. But if the zone is violated, then we cannot say that is an active zone. Mostly you have to remove that zone from the charts, violated zones or even pierced zones. But sometimes why we are drawing pierced zones? Using pierced zones, we can identify bull traps and bear traps. That's why we are keeping pierced zones in our list. Because there are people, they trade only using traps. They will not take any other trades. I have seen some traders. They always use only traps. In remaining zones, they never test. They trust only the traps. For such kind of people, these pierced zones will be helpful. Let us check whether we can identify any bear trap below this zone when we move on to 75 minutes or 125 minutes or even 25 minutes or 15 minutes time frame. Time being this is pierced, but here one more zone is created, new zone. Look into the third one. 24-1, one base candle and then leg out. 24-1 is the leg in. 24-1, 2024. See, this is, look into this candle. The date of this candle is 24 January 2024. This is the leg in, base, rally. So we can draw one more zone here. This is also a valid zone. Actually, this is the valid zone. The one below pierced one is invalid. Still, why I am keeping pierced zone? To identify the traps below this. Okay, fine. This is about when will be the next active high liquidity zone, fifth one. When is the fifth one? 21-11. In case if any crash happened in Nifty, on fifth one, this is the one, 29-11-2023, one base candle, and then we have a leg out. So 29-11, let us draw the zone. So this is the one, rally, base, rally with hidden body, 29-11. So this is a high liquidity zone, rally, base, rally. If at all anything wrong happens, probably Nifty gets support in this line. And moreover, this zone is within the quarterly zone, right? This is the quarterly zone. Is it quarterly? No, this is not quarterly. Let me check. Let me go to 3 months time frame. Yes. Inside rally, base, rally, quarterly zone. Inside we have drawn this daily zone. The daily high liquidity zone is there inside the quarterly zone. This is the quarterly inside daily. And below this daily we have a weekly zone. We have drawn a weekly zone by compromising. Actually this is not a valid weekly zone. This is rally, base, rally. The reason is the base candle is not actually a base candle. It is a ERC candle. And this leg out candle is not actually leg out candle. It is a medium size leg candle. But I compromised and draw this zone just to identify lower time frame zones in this area, because in this area weekly confluence is there. If one of these zones gets weekly confluence, probably if this week if there is any huge fall in the prices and enters into this area, we may get a support somewhere here at the weekly zone, because weekly overextension will be completed. From here probably prices will be moving up. So by keeping those points in my mind, I have compromised and drawn this zone, weekly zone. This is the point you have to observe. Okay, next daily. This is a daily zone. This is a daily high liquidity zone. Let me draw the text. Otherwise, by the time we get into 15 minutes and 5 minutes, we don't understand what kind of zone it is. This is a daily HLQ zone, HLQ demand zone. This is the one. And this one is a daily this is a pierced, actually this is a high liquidity zone but pierced. The pierced high liquidity zone. This one. And this one is a daily zone, not a high liquidity. High liquidity zone is pierced. Because within the area, after some time again a new zone is created, you cannot call that as a pierced, high liquidity zone. It is just a daily demand zone, that's it. And this is also a daily demand zone. Now daily is completed, but before that, and what about this zone? This is a weekly zone. Let me draw this. And what about this? This is a compromised weekly zone. That compromised means actually it is not a valid weekly zone. We just compromised and drawn. Compromised weekly demand zone for reference. This is a compromised weekly demand zone for reference purpose and having a weekly EMA confluence. This entire area is a compromised weekly, not a valid weekly. That is what, let me show you once again. This is the one we compromised and drawn. Actually, this is not a base candle, this is a ERC candle. Still we drawn, just compromised, just for reference purpose. Remember, unless you are an experienced person, don't compromise and draw the zones. The reason why I have drawn is, I have a valid reasons. There is a weekly EMA confluence. And I don't want to consider this weekly and I want to use for our analysis purpose. There could be lower time frame zones in this area because there is a weekly EMA confluence. For that purpose I have drawn here. And next finally we went to daily. Here we have identified a daily pierced zone. This is already pierced. Why we have drawn pierced? Below there could be bear trap. We want to identify those bear traps. In which time frame? Probably it will be there. The time frames below daily, maybe 125 minutes or maybe 75 minutes or maybe even 15 minutes. It is possible even 5 minutes also. Those bear traps, probably more liquidity will be there. That is one reason. If more higher the time frame, higher liquidity will be there. If it is a 5-minute zone, the liquidity will be limited to short period. If it is a 125 minutes or 75-minute zone, maybe there could be a strong liquidity will be there. Compare it to 5-minute zone. Okay, finally we have drawn up to daily. Now let us move to 75 minutes time frame. So going back, changing daily to 75 minutes. Let me generate the chain. And from now onwards, high liquidity zones plays major role because they will act as strong support and resistance. If it is supply zone, it will act as a resistance. If it is a demand zone, it will act as a support. The high liquidity zones. So we will give highest importance to high liquidity zones. So we have two zones. One is the nearest demand zone and another one is the high liquidity demand zone. And it is already tested once and 3 rejections from this zone. So probably there could be strong order flow might be there in this zone. So we will draw both these zones because this is the nearest zone. Let us draw 125 minutes zone. So when it is a 22 February at 9:15 candle, after the 2 base candles. 22 February 9:15 candle, I am changing the time frame to 125 minutes. Let me check the date. It is the 22 February. Is it demand zone? Yes. This is the one, 22 February 9:15, but only one base candle. It is showing 2. Which time frame is it? It's 7. Oh, sorry. We have to go to 125 minutes. I'm sorry. I generated a wrong report. So first we have to go to 125 minutes. I'm regenerating the chain. So here also we have 2 zones, nearest demand zone and high liquidity zone is there. So in the nearest demand zone, this is also 22 February 9:15, only one base candle. So that is what in our chart, we have a drop base rally. This is the most recent 75 minutes zone for the current price. So let me change the time to 125 minutes or 75 minutes demand zone. The color I am changing. Okay, this is the nearest one, but we have high liquidity zone here, the second one. Let us give priority. Already one test and one rejection. When it is 14th February, 1325 candle. After that, 3 base candles. 14th February. When is 14th February? Here, this is 14th February, 1325, these 3 base candles. And moreover, both these zones are LOTL zones, level on the top of the level. Generally, what you observe in high liquidity zone, again and again, new zones will be created. That is what you observed here. It may not be on the same time frame. Mostly in lower time frames you will see. If it is 125, below 125, maybe 25 minutes you can consider. In 25 minutes, the next zone for 125 minutes, lower time frame zone. You may see more 25-minute zones will be created. But in this example, what happened? Within high liquidity zone, another zone is created on the same time frame. That means there is a very strong order flow institutions are creating by using the concept LOTL. Because this is a high liquidity zone, obviously you have to give priority to the LOTL zone also. So next time when you prices entering here, this zone also you should give importance the way how you are giving importance to high liquidity zone. So even in this zone you can plan trades if your other parameters supports like trend, price direction, location. If all these are all in your favor, you can plan a trade here. But whatever it is, these levels are going to be acting as a support at 125 minutes level. There is one more demand zone at 25 1 915. Let us draw this also with two candles. 25-1, 9-15 candle. Yeah, here 25-1, 9-15 candle. Drop, two base candles and a rally candle. Actually, this is a medium size leg candle. Sometimes we can consider if there is a base candle. After that, if you get a medium size candle, that candle also you will consider as a base candle. Previously, once I told you this point. You have a drop, you have a base candle, you have a medium size leg candle. Still, you are considering this is part of the base. And then you have a rally candle with gap. And this is a 125 minutes demand zone. But what we are interested, is there any zone below this daily zone which is acting as a trap? We need to look for that. And probably when it will be there in 21st December, after that, if there is any zone below, let us check. We are in 21st 12. This is also pierced, right? That means this zone is also part of this zone which is pierced. So probably we can't find a bull trap. We should look for a bull trap in 75 minutes or maybe 15 minutes or even 25 minutes, because this is also pierced. So let us limit ourselves to up to this level. Now we will move on to 75 minutes. Before that, let me give labels. This is 125 minutes demand zone. This is also 125 minutes demand zone. The reason why I am giving labels, not to get confusion when we move on to lower time frames. But this 125 minutes demand zone is 125 minutes high liquidity demand zone. That point we should not forget. That means within this week, at this level, we see a strong support in this area. If anybody wants to plan trades in Nifty, if prices enter into this high liquidity area, you can plan a trade. Because high liquidity zones act as a support for us. Support and resistance. High liquidity demand zone is a support. HLQ demand zone. Okay, now let us move on to 75 minutes. So we are generating supply, we are generating the chain for 75 minutes. Look here, Nifty 50, 75 minutes supply demand zone chain. Okay, here, what is the nearest demand zone here? At 22 February 9:15, after the two base candles, 22 February. Let me change to 75 minutes. The same thing, 22 February, two base candles and a rally. That means this is the same 125 minutes demand zone is also acting as a 75 minutes demand zone. So I am drawing this is 75 minutes or 125 minutes demand zone. Both are same. But there is a high liquidity demand zone in 75 minutes. Already tested once, so 3 rejections are there. That means there is a strong order flow in this area. So what is it? 14 to 14:15. After that 5 base candle. 14 February, 14:15. This is the area. 14 February, 14:15. 1, 2, 3, 4, 5. That means the same area once again is acting as 75 minutes or 125. Both are same exactly. See, many times you see there may not be much difference between 75 and 125 minutes, but there are some times you see there won't be 75 minute zone, but there can be 125 minute zone or vice versa. But in this example, both are exactly same. 75 minutes, 125. Only difference is the number of candles are increased. That's it. See, this is a real high liquidity area. Probably this week, Nifty may not go below this. If these levels are broken, probably you can see a huge fall in Nifty. That possibility is also there, all the way up to this zone. What is this zone? The compromised weekly area. There we have a demand zone is there. And moreover in this area, weekly EMA confluence is there. If prices are entering into this area, weekly price over extension is completed. Once price over extension completes, what happens? Then once again prices will be started moving up, because our extension is completed during a uptrend, because currently market is uptrend. Market is currently at all-time high, the values. Okay, 75 minutes also we have completed. Now let us go back to 15 minutes. Sorry, there is one more, 25 minutes. So changing the time to 25 minutes, generating supply demand zone chain. So what is the nearest 25 minutes demand zone? 22nd February 11:20, and we have 4 base candles. 22nd February 11:20 candle. So changing the time frame to 25. 22nd February 11:20. See, after that 4 base candles. Let us check 4 base candles. 4 base candles. So this is the way we can draw a zone here, rally, base, rally. And here the order flow is the real order flow. But this is a normal demand zone. Sorry, it is 25 minutes. 25 minutes demand zone. See, this entire area is either 75 or 125 minutes area. In that, the order flow related to 25 minutes demand zone. Now you can plan, in case instead of 75 minutes entry, you take 25 minutes entry and minimize the risk. Those people who feel this entire 75 minutes area is a big risk, now the real order flow we identified here, within this area you will plan your trade. But where is the high liquidity zone in 25 minutes? This is here we have S underscore DZ. S underscore DZ is very powerful, especially in daily and below time frames. S underscore DZ, R underscore SZ. They are our real support and resistance. It is already tested once. See how many rejections, 5 rejections from this area. So that means that there is a strong order flow is there. Then only we see these many rejections. Okay, where is it? This is the 15th February. 15th February at 1 o'clock 25 minutes candle, afternoon. After that 4 base candles. So 15th February 13:25. So changing the, yeah, we are already in 25. 15th February, where it is? February 13:25. This is the one. We have a rally, 1, 2, 3, 4 base candles. So exactly with this there is a LOTL. See here we have one more 25. This is 125. This is another 25. LOTL concept. Even below also you have one more zone. Rally, base, rally. This is also you can draw another 125 minutes. See the order flow is very strong here. We have a rally, base, rally. So this is the area where high liquidity is there. That's why there are several 25 minutes orders. See the below. This is also high liquidity zone, but low priority high liquidity zone. TCZ is a low priority high liquidity zone. This is also already tested once, 2 rejections. And when 31, 1440. 31, 1440. Something wrong. Okay. Why this zone not identified here is there is a reason. Software identified this as a base candle, not leg candle. This is the leg candle, leg in 1, 2, 3, 4, 5, 6, 7 base candles. That's why software knows this zone will be violated. It is not a valid zone. So it didn't recognize this zone. Actually, this is a base candle. But why consider leg? Okay, compromised and I considered, but strictly speaking, all these are all base candles. This is the real leg candle according to the software. So anyway, software is much accurate. I am giving priority to that because every time I cannot compromise and draw the zones. That leads to problems. So the next zone is 31, 1440. This is the one. This is the next 25 minutes zone. This is a 25 minutes low priority, high liquidity demand zone. That is what I have specified here. See, previously it is tested from here. So already tested once. And 2 rejections. This is a rejection. But this one, because our software, our software uses a concept called entry buffer, dynamic entry buffer. Due to that, second also considered with the buffer. Second one is also considered a rejection from this zone. That means there is a strong order flow in this area. Okay, this is about 25 minute zone. Now let us limit to this levels. Next, let us go to next time frame, that is 15 minutes. Let us check high liquidity areas within 15 minutes level. We have first 3 are high liquidity zones. Let us draw these 3 zones and we will limit to that. That means strong order flow is there, especially demand. There is no supply zones. The first one is an all-time high demand zone and it is a high liquidity zone. The second one is a high liquidity zone, already tested once, and 3 rejections from this area. And third one is also high liquidity zone and a fresh zone. So what we do, let us draw all the 3. The first one is 22 February 14:15. So within this 75 minutes area. 22 February. In this area, I am changing the time frame. I didn't change. Now it is 15 minutes area. 22 February. How many base candles? One base candle. 22 February 14:15. February 14:15. So this is a, according to the software, this is a medium size leg candle, and this is a base candle and a rally candle. So that way it has drawn this 15 minutes. High liquidity demand zone. 15 minutes high liquidity demand zone. So probably Monday Nifty may get support in this zone. In case if this zone is violated, where is the next one? The second one is also high liquidity zone, but it is already tested once, and 3 rejections indicates a strong order flow in this area. This is 15th February 14 and 5 base candles. This is the one. 15th February rally 5 base candles. 1, 2, 3, 4, 5. 6 base candles are coming. 1, 2, 3, 4, 5, 6, 7 base candles. Something wrong. 15th February 14 hours. This is 11:30. Sorry, my bad. I'm looking at 22 February. This is 15th February. I'm sorry, 15th February. 15th February somewhere here. This is the 15th February. 14 hours. This is the drop candle. And then we have 1, 2, 3, 4, 5 base candles. This is the zone. This entire thing is the zone. And in this zone, this is 15 minutes. High liquidity demand zone. This is inside the 25. That means 25 and 15 minutes are almost same, but slightly it reduced the risk. Instead of taking entry at the proximal line of the 25 minutes, we take the entry at proximal line of 25 minutes. This is a high liquidity zone. The same zone, prices already entered. But the only thing is they went more deep inside. They already went deep inside. But again a new zone is created within this area. You may see here rally, base, rally. And also there is one more high liquidity zone. 14th February at 1 o'clock 15 minutes. This is the one. This is a maybe considered software consider this is a medium size leg candle, and these two are base candles. See here, 14th February, 2 base candles. So let us draw the zone. Drop, two base candles and a rally candle. And what kind of zone? This is also high liquidity zone, 15 minutes. Suppose if these levels are broken and finally prices will be coming up to this area, there is a daily demand zone. Inside the daily demand zone, we have a 15 minutes high liquidity demand zone is there. Probably in this daily demand zone, in this 15 minutes area, we may get a support. There are still below also high liquidity zones are there. Probably they may come in the weekly area. We have compromised and drawn weekly area. That way you may see these demand zones, but let us limit to this. See, generally these 15 minutes, if prices are coming down next, maybe during this week or maybe next 2 to 3 days during the week, this will act as a support. If this is broken, then only prices will be entering into the weekly area we have drawn. There we have EMA confluence. See, this is the compromised weekly demand zone, reference purpose and having weekly EMA confluence. So inside this area, prices will enter. If there is a sharp fall in this week, if not, most probably one of these 15 minutes high liquidity area, it will get the support. So this is a 21,680 area. That means Nifty should fall by at least 800 points during this week. Then only it will get into this area. The immediate support Nifty will get in this area, 15 minutes high liquidity demand zone. But remember, this is the all-time high liquidity demand zone, immediately near the all-time high. This is the one already tested earlier. Now we will see 5 minutes, the last time frame. Let us generate the chain. See, here we have a high liquidity supply zone. Only at 5 minutes we have a supply zone at high liquidity. Already it gave one test and there is a rejection from this area. And below there is one more high liquidity supply zone is also there below. Now currently Nifty is having 3 supply zones. In the 2 are high liquidity supply zones. And the nearest demand zone is a high liquidity demand zone which is fresh. Let us look into these levels. First let us draw these 2 high liquidity supply zones. The first one is, that means on this last Friday probably they would have created. Yes, on 23rd February at 10 o'clock, 10 minutes, 1 base candle. 10 o'clock, 10 minutes, 5 minutes candle. 23rd, 10:10. So this is the one. This is the leg-in, this is the base, and this is the drop. Let us draw the 5-minute supply zone. Let me change the color to supply zone. This is a high liquidity supply zone. See the test it got, and after that again it pushed to the prices. After that prices didn't get into this area. This is what happened on last Friday during the live market hours. During the live market hours, this high liquidity zone is created. This is the first one. C underscore SZ. See, next one is R underscore SZ. I always say, daily and below, the support high liquidity zone, resistance high liquidity zone, they are very powerful. See, it supported even 5 times this zone is tested. Even this zone is not violated. And 6 times there are rejections from this zone. See how much supply would have been there in this zone. A very strong supply. When it is created, this is also on Friday. At 12 o'clock 50 minutes candle, after that 5 base candles are there. So 23rd at 12 o'clock 50 minutes. This is the one, 23rd, 12 o'clock, 15 minutes. And system consider this as a base candle. 2, 3, 4, 5 candles. Actually, this can be used as a, okay, because we expanded, it is looking like. But if you see normally, now compare with the other candles, this is also a small candle. That's why software considered. 1, 2, 3, 4, 5 base candles. This is a rally candle. This is a LOTL. We have two high liquidity zones with LOTL, level on the top of the level on the same time frame. That means a lot of liquidity, high liquidity institutions created in these areas. So let me draw, let me write the text. This is 5 minutes, high liquidity supply zone. And even this one also, 5 minutes, high liquidity supply zone. We have two 5 minutes high liquidity supply zones. Now, what is the most recently available supply zone to the current price? Even this is also having strong, because two rejections are there from this. 23rd at 1450 candle. 1450, one base candle. 1450 is the leg-in. 23rd, 1450. So this is the one. This is a rally candle, base candle, drop candle. 23rd, 1450. Let me cross check again. Yes, 23rd February, 1450. See the rejections from this area. Let me go to type true. So before that. So here also there is a strong order flow. Let me draw completely. Wick to wick. And this is a 5 minutes supply zone, normal supply zone. Even this normal supply zone is also looking very strong. Who knows, this could be also a high liquidity area. But at present our software may not be having enough data to confirm this is high liquidity. Maybe after some day, after some candles, it may identify this is high liquidity, but time being our software is not identified. Or may not be high liquidity. Why I am making this comment? There are strong rejections from this area. But remember, this is only at 5 minutes level. 5 minutes level liquidity will be only for temporary purpose, high liquidity. It will not last for many candles. Maybe within few hours. It may withstand. After that, that will be violated. But currently, only 5 minutes we have supply zones. That too at 5 minutes we have supply zones. And remaining time frames we don't have any supply zones. All the zones are all-time high demand zones except 5 minutes. Okay, now 5 minutes we have a high liquidity demand zone. The first one, fourth one. This is the first demand zone. The fourth one is the first demand zone. Near to the current price is a high liquidity zone. It is a fresh zone. And when it is 22nd February 1435. Here inside the 15 minutes. See, 15 minutes is a high liquidity demand zone. Inside the 15 minutes, we have rally, base rally. This is also a high liquidity zone. That is excellent. This is 5 minutes high liquidity demand zone. Good. So probably you may expect some price movement between these high liquidity demand zone and this high liquidity supply zone on Monday. If one of these zones, high liquidity zones, is violated completely, then price direction will be identified. Suppose if this this high liquidity zone is violated. See, inside we have two zones are there, two 5-minute zone. We have a rally base rally. This is a normal zone. But inside 15 minutes high liquidity zone. And this is a rally base rally. This is 5 minutes high liquidity zone. So probably it supports multiple tests on Monday. If this is violated, probably the normal zone may give one test because this inside 15 minutes high liquidity, it may support one test. After that, this also might be violated and finally prices will reach to this one. This 75 minutes high liquidity demand zone area, it will reach. 75 minutes and 125 minutes, both are high liquidity. If this is also violated, then only the prices will enter into, there is one more 15 minutes high liquidity zone, that also should be violated. Here 25 minutes low priority high liquidity zone, which is just above the weekly zone we have drawn. The compromised weekly demand zone we have drawn. But why we are giving importance to this area? The compromised weekly zone, why we are giving importance? Because there weekly EMA confluence is there, and moreover if prices reaches there, the weekly price over extension will be completed. And the confluence zone, EMA confluence during uptrend is a powerful market. I mean a powerful concept, not market. It is a powerful concept. But so many high liquidity zones should be violated if prices wants to enter into that weekly area. If that is the case, your supply should have been very, very strong. Then only it is possible. But Monday you will get good opportunities, trading opportunities to plan your intraday trades or short-term trades in between these zones. If suppose this supply zone is violated, high liquidity supply zone, maybe we may see a rally in the market. Because prices are reaching all-time high. When all-time high comes, generally two things happen. There will be a rally will continue, or otherwise institutions, they add a new supply and again they push the prices down. That possibility is also there. But once the real rally starts at all-time high, it is very difficult to stop it. Market may move another 500 points up. That possibility is there. But if such kind of rally should happen, first these 5 minutes high liquidity zone should be violated. So this is what you should observe. See, this is how you do analysis and identify your strong supports and resistance. Here what I am finally concluding, the immediate support is, this is the area, this 5 minutes high liquidity or 15 minutes high liquidity. And this is your supply zone. And within how much range market will be moving? Let me draw info line. This is the starting of high liquidity. High liquidity to high liquidity I am drawing. So probably 124 points movement you can see in the market. This is the minimum. If one of these zones violated, this range will be increasing. This is immediately available. Probably this could be the price movement of Nifty on Monday. If suppose market, there is a equal demand and supply is there in the market, Probably within 124 range only market will be moving. The limits, upper and lower limits. Maybe it may go a little inside this zone, or it may go a little inside the supply zone. But the minimum area is within this 124 points area. This is the range for Nifty. How we are identifying? With the help of high liquidity zones by using supply demand zone chain concepts in our NeoStock software. If this range is broken, the next level ranges you will be saying, that is at 25 minutes levels, 75 minutes level. Now you change the time frame to 15 minutes. Now you can see this is the 15 minutes range from here to here, all time high area. But we don't have any supply zones. So what you have to do? At all time high you need to draw a horizontal line. This is all time high. Currently it is all time high. So what I am going to do? Let me change the template to ATH. Currently this is the all time high. So here it is displayed a text ATH, all time high, at left side. This is the 15 minutes range. I am saying 15 minutes range. Let me draw info line. Let me draw the info line. This is the 15 minutes range. Probably the next, you suppose if the supply zones are holding the prices, probably the next 2 to 3 days, 15 minutes is a short term, that is a DIT trades, right? Next 2 to 3 days, this could be the range. If this 15 minutes high liquidity is holding, in case. If not 15 minutes high, if 15 minutes high liquidity is not holding, the next level who will be holding? 25 minutes high liquidity will be holding the prices. Now move on to 25 minutes. So where is the 25 minutes nearest high liquidity zone? There is a 25 minutes demand zone is there, but that is not high liquidity. But here a 75 minutes high liquidity zone is there. That's why 25 minutes also you have to take immediately available 75 minutes high liquidity. So probably we can say this is the range for 25 minutes during the next week. This is a 25 minutes range. See, first one is 5 minutes range. Second one is 15 minutes range. This is a 25 minutes range. Now let us move on to 75 or 125 because both are same. Both are supporting high liquidity. Because this is 75 minutes high liquidity, so probably this is going to be $75 minutes. Till all-time high we are drawing. Market may go beyond all-time high. That possibility is there. But this is the minimal range from high liquidity 75 minutes zone to all-time high. Suppose this 75 minutes high liquidity is also broken. So what is the next support? Daily high liquidity zone. Where is the daily high liquidity zone? This is a pierced high liquidity zone. This is a daily normal demand zone. This is the daily high liquidity zone here. Above that we have pierced high liquidity zone. The pierced zone is there. Already a new demand zone is created, but that is a normal demand zone. But here EMA confluence is there. That's why it should get the support. Or there are higher chances that if this zone is violated, probably prices may get into the daily zone inside the quarterly area. This is the quarterly demand zone. So this is the next possibility. So, and Nifty down by 2000 points, then only we get an entry here. If at all Nifty goes to this area, 2000 points Nifty should go down. And when it happens, if something all of a sudden market overall dynamics are changed, if again some kind of a recession is there in the international markets, there is a panic among all the people, what people will do? Start selling to book their profits. If that is the case, prices will be coming up to this area. And moreover, you may ask me a question, is there any possibility that prices will come up to this area? Yes, there might be a possibility, who knows? And this week, coming week, monthly expiry is there in F&O segment. See how market is moved, so strong. If people wants to book their profits, long orders, what they have to do? They should short all their orders to book the profit. If next week, if profit booking is taking place, probably prices may come up to this area 2000. If not, at least the weekly overextension will be completed. That is up to this area. That means we have two possibilities. This is one possibility, and another possibility is we have a daily demand zone here. Inside also we have 125 minutes demand zone. So probably this could be area. And if this is the case, weekly overextension will be completed. After that again prices will be moving up. That possibility is there. Worst case scenario, this is the case. But if this is the case, how many points Nifty should go down? Probably another 800 points or 850 points. If Nifty goes down, then overextension will be completed. Weekly overextension in Nifty 50. That means in this demand zone, Nifty gets the support. We have a rally, base rally. We have a demand zone, daily demand zone. Inside we have weekly demand zone is also there. 125 minutes demand zone. Inside this daily demand zone. So this is the way your supply demand zone chain will be useful. This is how you need to draw. Mainly the support and resistance levels you will understand by drawing zones with the help of a supply demand zone chain. The only advantage is the supply demand zone chain will tell you which zone is the high liquidity zone and which zone is the normal zone. See, without supply demand zone chain also you can draw the zones, but only problem is you cannot identify which zone is high liquidity zone and which is not high liquidity zone. Because we cannot identify, we are taking the help of the software and we are drawing the zones and finding exact support levels and resistance levels with the help of high liquidity zones. Because high liquidity zones will act as support and resistance levels. They will not let the prices go easily. They will try to stop the prices. That's why they are acting as support and resistance. But what we are doing, from higher time frame till lower time frame, we are seeing lower time frame level. What are support and see tomorrow on Monday, what could be Nifty range? We identified. For that we went to 5 minutes time frame. So in this 5 minutes time frame, we identified this is the area. This is the range for Monday. This is Monday's range. And 15 minutes is probably next 2 to 3 days range. And this 75 minutes range is probably, this is the 25 minutes. Probably the next 1 week range. And this 75 minutes range is probably next 1 week or if not maybe 1 more week extra range. So this is the way you identify your ranges, and this is the daily range, probably next 3 to 4 weeks range or maybe 1 month or a little higher range, because this is a 2000 points range. All these ranges you identified with the help of high liquidity zones. and also price over extension at a weekly zone, at weekly time frame. But the only thing we did is we compromised and drawn a temporary weekly zone. So that inside any zones will be there, good zones. That is what we identified in order to support the overextension, completion of the overextension. And moreover, weekly EMA confluence is there. Exactly the same way you can do in Bank Nifty also. What I do, quickly in next 2 to 3 minutes, I will generate the zones and I will show you. I will not comment anything. I just generate Bank Nifty zones. You just draw the zones accordingly. You pause the video there and draw on Bank Nifty and identify what could be Monday's levels in Bank Nifty and what could be next 2 to 3 days range in Bank Nifty, or what could be next 1 week range in Bank Nifty, or what is next 1 month range in Bank Nifty. That way you identify with the help of the high liquidity zones. That is the most important point. So let me generate Bank Nifty. So here I am entering the Bank Nifty. And starting from 6 months, or starting from quarterly, we will start. Let me show you the zones. These are the quarterly zones. I think this is a fresh zone created. That's why zone strength is not yet identified. And let me go back. Pause the video and then you study. Let me change the time frame to monthly. Let me generate the chain, monthly chain. And also keep observing the trend also here. I forgot to tell you. HTF, ITF, LTF trends. Now let me go back and change the time frame to weekly and let me generate the chain. You can identify the high liquidities. So let me go back and change the time frame to daily. Let me generate the chain. These are the daily zones. Nifty daily we have supply zones. That means that from daily onwards, Nifty is having supply zones. This is the immediate supply zone. This is the immediate demand zone. Immediate demand zone is a high liquidity zone. A little above the next to immediate supply zone, also a high liquidity zone. That way, high liquidity zone to high liquidity zone, what is the range? That way you identify. Now let me go back, change the time frame. Now let me generate to 125 minutes chain. So the immediately available demand zones and we have only one immediate supply zone. Now let me go back and generate 75 minutes supply demand zone chain. Nifty is having 5 supply zones. Sixth one is a demand zone. Sixth one onwards, a demand zone. Look for high liquidity zones. From high liquidity zone to high liquidity zone, how many points are there? So let me go back and change the time frame to 25 minutes and I am generating the chain for Bank Nifty. "25 minutes time frame is having 3 supply zones. Fourth one onwards, demand zones. So let me go back, change the time frame to 15 minutes and let me generate the chain. So 25 minutes, 15 minutes. 15 minutes is having 7 supply zones. 8th onwards, demand zones. So let me go back and change the time frame to last time frame 5 minutes and let me generate the chain. So up to 10, 5-minute supply zones are there. 11th onwards, demand zones are started. Look into immediately available demand zone and immediately available supply zone. At 5 minutes level, there is an immediate demand zone and supply zone. Both are high liquidity demand and supply zones. See what is the range. If the range is very small, look for the next zones and check the range. These high liquidity zones only mostly it will tell the direction of the market and the range of the market on Monday's market at 5 minutes level. But look into the trend at 5 minutes. Intermediate trend is changed to sideways. So you have to understand the market movement based on the trend also. So this is about demand and supply zone chain for Nifty and Bank Nifty. Hope this information is useful for better understanding about how to study the market with the help of high liquidity demand and supply zones. So let's take a break here and we'll continue from here in the next video. Thank you.